right after the FOMC, I updated in my Telegram group. So just a general market update. So I talk about the fail scenario is unfolding after the FOMC as discussed. So we already see this bar coming out. So that's actually unfolding. So for the bearish case, we got a like fail breakout and then break back in. However, supply is way lower and so was the bearish spread. So I think that could be the start of a bullish test of the previous pullback. So this is the previous pullback. Sorry, not from there. I think this one is a previous pullback, and this could be the start of another test of this pullback. So basically, what I'm saying is I don't really see spike of the volume, and I didn't see the spike, the bearish spread. So it's just a normal reversal bar. So it's just kind of a failure, but not very threatening. So I think this is a good thing out from the FOMC in terms of the price action. So let me just jump straight to the S&P 500. Okay, so you can definitely see this S&P chart. So last week, last Tuesday, where are we? So we're somewhere around here, Monday, Tuesday. So Tuesday, we have a breakout and we talked about there could be a bullish or a bearish case. So for the bullish case, it's very simple. We just need to break out, test, and then going up. But for the bearish case, is something like this. We want to see a failure. So tested this swing high. So it's unfolding exactly like what we discussed. However, the thing that is not bearish at all is in terms of spread and in terms of the volume. So especially the volume. So look at this volume has been decreasing throughout. And if we compare to the previous downswing, is not that scary in terms of the level of the supply. So in fact, it's kind of lower a little bit here. So in terms of the spread, it's probably there, but I did not really see a huge engulfing like this. So that's why just right after this bar, I thought like, well, this is likely a healthy pullback. So the next few bar actually confirms that. So why is that? So first, when we look at this reaction, so this no doubt is still a reaction. This is still a pullback. So this is no doubt for that. But in terms of the supply, what are we seeing here? So supply has been decreasing. So right after the FOMC bar, we have another rejection tail. So slight increase of the volume, so suggests there's still supply. But next bar, also consistent, similar volume to the FOMC day. But look at this, that's demand tail. So suggests people buying. And yesterday, the volume just dropped significantly. And we got a kind of a doji not going anywhere. So we're still in today's bar. So far, this is still a reaction. But in what way? So I only see that this is a reaction, unlike this sort of the reaction in terms of the magnitude. Or if you want, you can also say that so far it is probably still contained within this FOMC bar. So we got a tail here, another tail, close above, close above, close within, close within. So it's still within this bar. Basically, I think this is a good sign if we can have this sort of the reaction as a horizontal type of the consolidation rather than a pullback like going down. So I think this will be a very bullish sign. But like I mentioned just now, in terms of the market breadth, it's still negative. So that was actually the thing that I'm very concerned about, because without the stocks to participate, we can only see this selective big cap stocks or the big tech stocks just move up, and without the participation of the rest of the stocks. So just keep in mind of the negative market breadth. And in terms of the overall market environment is neutral based on a screener, because we still can find a lot of the stocks to trade at the moment. So that is not an issue. But in terms of the health of the market is not that healthy. But in terms of this price action of the S&P, it's very encouraging, very relatively bullish. And so far, this is still a reaction, and it's a test of this previous reaction that comes with increasing of the volume. So at the moment, we see that the volume has been decreasing, the supply has been decreasing. So if the supply has been exhausted, likely we can see that they will just slowly go up and then to break above this swing high resistance level, which is around 40.80. And eventually this is the target. Like, this is another zone here, because right now the very immediate level that will cap at this 4080 to about 4100, still this area. Okay, so this is a resistance area. Once we have this, so attempt to break, and then hopefully with another shallow type of the reaction, and eventually just going up, that will just attempt or test into this previous resistance level to around 4200. So that is the S&P 500. And in terms of the overall market structure, like I say, we're still stuck within this big trading range. And if we do see this kind of the volume and also this kind of the bullish price action, like this going up, then this is really quite a typical type of the accumulation structure. So that is a bullish accumulation structure. So if we keep seeing this, and with decreasing of the volume, with higher lows throughout, just going up and then inching up and then breaking out, then I think we should see the improvement in terms of the market breadth. Means that the percentage of the stocks above the 20-day, 50-day, 150-day, 200-day. So all of this market breadth should improve and should just keep going up with more and more stocks to participate. So that will be a very bullish sign. So what about a bearish sign? So anything else that could be bearish, if we did not release first, did not see the improvement in terms of the market breadth. Second, if we see failure keep coming out, means something like this: breakout, fail, and then with SPY of the supply, that will be bearish, and then likely will just keep dragging to test at least the low. So swing low here, another swing low here. That will be the immediate support level. So this is one level, 3900, another level, 3800. So this is the area. So far, short term, I think we should see S&P 500 just keep inching up, going up, and you can just keep breaking the resistance level and then to challenge the resistance at about 4200. So first level 4080, second 41. So I would treat this as an area 4080 to about 4100, and once it's broken, then it's going to test at 4200. So far, in terms of the price action, it's looking bullish. Supply has been decreasing. The reaction is very bullish, so we did not really see a lot of the downwards results. So that's a good thing. So the main thing left is the market breadth. So I just want to see the improvement of the breadth. I want to see more and more stocks, and especially it's even better if we got a whole group, a different group participate. That will be a lot better. Okay, so that's the S&P. And in terms of the other few index, no doubt Nasdaq is still the strongest. So just look at this. So routing, hold up again right here. So it just seems like it's going to break to the new high. But if you look closely, you might see this few rejection tail. So there is rejection tail. But do we see any results to the downside? Not yet. So far, it's still a horizontal type of the consolidation with relatively low volume, or I'll say it's just a normal volume. So it's not exactly like the volume that we should be worried about. So if you look at this chart, look at this volume. So it's just kind of consistent, and in terms of the pullback, like especially yesterday, is also low. So not too much difference from here, this leg here. So I think so far this is quite a normal volume. I don't really worry about that. But in terms of Nasdaq 100, because it's just like about 100 stocks, 100 big cap, mega cap stocks, just support the index. So it's quite obvious that only those selected stocks are showing outperformance. But in terms of the Russell, it's still consolidate at the lower end, so not that good. So far, Nasdaq 100 is the strongest, followed by S&P, and comparing RTY, the Russell, and also the Dow, probably is about the same. You can put it 3, 4, doesn't really matter. But in terms of the structure, look at this Dow Jones. So initially, there's a breakout or breakout to the downside. So breakdown. So sign of weakness, especially with the increasing of the volume. But do we have any confirmation? No, not yet, because it did not really break below. Instead, it's just kind of act like a spring, a temporary commitment. But so far, it's still unfolding because it's still working towards this access level. So attempt to commit above, but still there's a rejection. But most importantly, supply has been decreasing. I think this is quite encouraging in terms of Dow Jones. So that is the outlook. So for Russell, it's very obvious. It's not within this trading range. So until we see the breakout here, then it should just consolidate somewhere around here. So Nikki say money move from big value stocks to Nasdaq growth. Yes, absolutely. So if you look at, if you want to catch my latest videos, click on the subscribe button and the bell right now so that you get instant notification once I upload my latest video. If you want to check out my online courses, go to tradeprecise.com to find out how to profit consistently from any market without using complex indicator or understanding any financial statement, no matter you are trading or investing.